Hello everyone and welcome to my channel where I go over daily price action of the stock market. My trading philosophy is you should be good with news but better with price action. I will try to post videos here regularly and provide my analysis of the stock market. Alright, so let's do this. So Friday was again a red day. SPY was down 1.44%, Nasdaq was down 1.40, IWM knocked down 2.88%. So that was a pretty bad day for all the three indexes. We could see wicks shooting up, and I was talking about wicks when I was taking my trade on Friday, and I have a separate video going out which is called Quick Bucks, where I will go over fast and exclusive trades which are short in nature. You get in and you get out, you respect the price action, you take your profits. Of course, you manage your risk. I have that link in the description below, so you can check that out, and you should be able to see it here somewhere. This was the wicks on Friday. It went up like crazy. This was a parabolic move, which clearly wasn't sustainable. Wicks going from almost 24 to 29, and that was dramatic. And then this was clearly unsustainable, and it broke down. And that is where on Friday markets started stabilizing, and I believe the short starts covering. And this would happen every Friday if you pay attention in the last hour. If we are not totally bearish, if we are not just going for it, then we would have some sort of a stability in the last couple of hours in the market on Friday, where the shorts are covering their positions and taking profits. So you would see this squash, but this was a significant move nonetheless. All right, so back to SPY. So we are clearly below 200 moving average. Things are pretty bearish, but from the price action standpoint, we are looking a bit oversold, and we might be due for a dead cat bounce. So dead cat bounce is when the shorts take profits in the short term, the longs, they are trying to get in. That creates a short term bounce, and then if the sentiment is still bearish, we go lower. So that would be a good place to load up on the shorts and for the next leg down. So one more thing I wanted to show you was the volume. Look at this. The volume spiked, right? So this day had this ended all the way down at the end, where we just like this candle, a juicy red candle, then I would have been much more bearish. But looking at the volume, it still looks like we might be going down in the short term. All right, now all of this is happening due to the culprit, which is XLF. Of course, look at this. So we just gapped down, we tried to recover, but then we ended up down, right? So this was and with heavy volume, just like SPY. It is completely flushed out. I think we are seeing some sort of a capitulation here. Now I don't know what is the extent to which we would. As you can see, this is a meltdown that is taking SPY and IWM with it. IWM, just clear this volume. Let's just talk about price action. That's what this channel is about. So IWM, man, this gap down and go, okay, and this was like almost elongated price move from here all the way. So from 186 all the way to 176, we just went there in a couple of days, which is almost like double the standard deviation. So this is pretty amazing. So the narrative here is that the clients, they're panicking and they're creating a bank run. What's a bank run? It's when the clients panic and run to withdraw their money out of the bank all at once. That creates a liquidity crunch. And currently, Silicon Valley Bank is doing that, which is SIVB, sorry. It's the SVB Financial Group. The situation is the bank took a massive loss when they sold long-term government bonds of 30 years maturity at extremely low interest rates. They did that using depositors' cash. And due to tight financial conditions right now, there is a liquidity issue. The buzz is this has spin up a bank run, and the fear is this might snowball into something big, something almost like another 2008 kind of a scenario. So that's the narrative. Okay, so let's look at the 10-year yield. So US 10Y, I believe is yep. So if you look at that, that is dropping, right? So it is plummeting. This happens as people are fleeing towards bonds. So bond prices go up, and that causes the bond yields to go down significantly. So they are inversely proportional, right? So the bonds go up, the yield goes down. And right now we are seeing that. We are seeing the yields go down. People are dropping it like hot potatoes. Okay, so what did I do? On Friday, I entered right here somewhere. You saw here that we started going down. We recovered a little. This happens, there's a buying and selling in the first couple of hours. That is crazy. So when we started going down again, we didn't make a lower low, started recovering, and I was looking at this on a 5 minutes chart. So this was already oversold. I was looking at this, and then I was trying to see if it stabilizes, which it did. And as soon as it was trying to make another lower low, the bulls came in. I was sold by this bullish engulfing candle on 1 minute. And again, this I usually stay around 5 minutes or 10 minutes. But when I'm zooming in into the market to see what the price action would do, I go to 1 minute and see if there is any strength in the bulls, right? So I saw that here, right? And then as soon as we started getting down here, the bulls they picked it up again, and this is where I had entered on this candle right here, and I started writing it up, and that is when I started making a video about this, and you should check it out. It's a quick 3 minute video that would kind of give you some sort of a perspective. I was out by this candle, right? So as soon as we started going down, I was just out, and then as soon as I started going on the family, saw a rejection from this zone. We saw this massive bear run, which just brought the price action back to the level where we saw the bulls. And right here, as you can see, it again touched this trend line. I had drawn this trend line on 1 minute, so it might look a little awkward. But as soon as we started going up, I just waited to see if the bulls had enough strength to bring this up all the way here and then break this and go up, right? But then that would have been a nice green day. But looks like the sentiment is changing. And then I shifted my focus to SPY because I knew that SPY was weak. And I was just waiting to see if we are able to break this trend line, which we did. But right here, right here, when I started seeing rejections on 1 minute, right here, right, we started seeing rejections, and here's what I see. Okay, I see like a rally, a base. I'm just looking for bases right here, right? So like this was a base, this was a good base, and then we started dropping. So here, exactly here is where I went short. So yes, I went short in a little late. If you look at here, so this big move was already made, right? And usually what happens is that if you have a big move and then you have a similar big move, this is almost like an N pattern, right? And then this kind of leads you down on a leg down, a bigger leg down, just like this one. So that is what I was thinking. But again, this is trading, right? So like we have to have our assumptions, we have to get into the positions, we need to have the stop losses, and we need to exit if things don't work out, right? We take a small loss and we exit, or we ride the profits, right? So that's what I tried to do here, which worked out great because let me log into my account, which worked out great because this is what had happened after that. So like I started to gather more shorts, and then all of a sudden when the market went down, my shorts started printing, and I had a nice up day. That was what I did on Friday. So hopping back to TradingView, we are on SPY. Let me go back. So what I'm feeling right now is that a major move is made, and one should hang tight before making the next move. So right now, as it stands, I would first let the market decide what it needs to do before taking any further positions. I do have like a spread that I'm riding during the weekend, and I might close it on Monday. I would like to let the markets open its card first before I make any move. Right? That's what I'm trying to do.
All right, so let's talk about next week. So, you know that these days all the major moves are news driven, and one good source of important slash relevant news that I find pretty useful is myfxbook.com. And as you can see, it provides tons of useful data. And what I usually do is I go into the filters and just filter out the high impact news. Okay, for some reason it didn't do it. Let me try it again. All right. Anyway, so it doesn't seem like it's working right now. So what I usually do is just focus on these high, the red ones. I have not received any sponsorship from them. I'm far away from that for now, but maybe someday they would. As we can see, there are lots of events coming up next week. Um, in particular, the CPI reading for Feb. Um, Before that, let's put on our investor hats, shall we? Okay, so CPI is the Consumer Price Index. It is the measure of average change over time in the prices paid by consumer for a selected basket of consumer goods and services. That's a lot. So what this means is it's a measure of inflation experienced by consumers in their day-to-day living expenses. We can find the CPI data on many public websites, including this one. As you can see, for this bar chart, the January 2023 inflation rate was 6.4. We may normalize this to, let's say, 5 years. All right, so this is now normalized into a line chart that shows that the inflation was rising and in a very strong way ever since the 2020 crash, and then it peaked at, I believe it's 9.1%, and now right now it's 6. So um, yeah, so it was the last was 6.4%, and the one before that was 6.5. So it was rising dramatically, and then now it's coming down. It's cooling off. The bad part, as obvious as it is, believe it or not, there is a good part to this. The good part is this measure is used to adjust income eligibility levels, federal tax brackets, and commercial rent escalations. So if you think about it, inflation is good for investors since the price rise will ultimately lead into more cash in our pockets, not only salary wise, but also investment wise. And I can cover this topic on a separate video altogether. Please let me know in the comments down below. Talking about the market reactions, right? Let's go back to tradingview.com, and the couple of levels that I'm seeing here is, one is this level right here, which could act as a good support level where we are seeing a good consolidation. And so this area could be where we could see some buyers if we are kind of just smashing in and selling all the way up until here. The other level that I'm watching for is this level right here. Let's say that if we have an absolute melt off, then I'm expecting some sort of a buying activity at this level right here, which is like at 4.17%. That's quite a lot. But it's not that it hasn't happened, right? Like if you see in the past, this was the reaction last year, and similar stuff can happen or may happen, or who knows, this is stock market. So all we need to do is understand the price action, try to see what is making sense at what day. If you are into news, what is the news. And talking about news, we have a couple of strategies in the market, right? So one is the buy the rumor, sell the news, and the inverse of it is sell the rumor, buy the news, right? So when we are buying the rumor, it is usually for some good news that is circulating in the market, where we are buying the rumor because we think that things are going to get better for any company or any stock that we are talking about. And then once the news is out, if it's not that exciting and if it doesn't live up to the rumor, then we see an instant rejection, right? That happens with the stocks. Vice versa, when we are selling the rumor, that is when there is a bad news that we are expecting, and we are selling all through the rumor, and then the news actually breaks and we see that it's not as bad. So there is an instant buying activity happens, and that kind of leads to like spikes like these, not this one in particular, but then spikes like these.
All right, so that wraps up this video. Don't forget to subscribe the channel and write comments to let me know how I can better my channel or what you would like to see, and I promise to provide the best and latest content from stock market, as this is my passion. See you later. Peace.